Let there be. An open source network where money flows more transparently. Let there be. Transactions without resource-intensive mining activities. Let there be. Tech that can unchain. Your code is the key. Let Ether be. Enter the Ether with ETHV. You can now get Ether exposure for 0 fees with the VanEck Ethereum ETF. An investment in the trust involves significant risk and may not be suitable for all investors. The trust is not an investment company registered under the Investment Company Act of 1940 or a commodity pool for the purposes of the Commodity Exchange Act, and thus offers fewer investor protections. Brokerage fees and commissions may apply.
And we're live. And so is the Ethereum ETF.
Yay!
Nice.
What's up, y'all? Welcome to the 122nd episode of Game Theory Gang. I'm Maddie Allen with special guests Frank Molina and Rachel Laub. Welcome.
Thank you for having me back on, Maddie. Thank you.
Thanks for having me too. Excited for today.
Yeah. I mean, today is a huge day in crypto news, so we'll have a deep discussion, I'm sure, about all of it. In the headlines, you see that Kamala Harris announced that she might be speaking at the Bitcoin conference along with Donald Trump. That's crazy news that just dropped today. Rachel and I and Big Kurkowski are going to the Bitcoin conference later this week on Thursday, Friday, Saturday. What else? We got the Ethereum the Ethereum ETF started trading today after many years in the making. And then we're also going to cover Frank's PulseX thesis and some of his background there. And so we got a lot of good stuff for people to tune into. So hit the like and subscribe button, share this out. This is going to be a good episode. And by the way, also wishing the rest of the gang a good vacation. I know ChrispyMan and Tobiwan are both with their loved ones, enjoying a little bit of summertime travel. So we're wishing them the best. They'll be back. So how have you guys been? What's new?
Not much on my end. Just I like to do these sporadic appear on Twitter and then stay on there for a few days and then just disappear for the next few weeks. So there's not really much to talk about when my ideology and my philosophy doesn't really change at all. So I show up and, whatever I see on the headlines during that day, they're in Bloomberg, and I kind of connected to what's going on in crypto, and I connected to what's going on in our ecosystem. I kind of just tweet about that, tweet my thoughts, and then like the video that I just did on PulseX, I winged it. I couldn't sleep a few days ago, and I was like, you know what? Let me just go talk about this, and it ended up being like one of my longest videos and one of my most viewed. So I was very surprised on that one. But yeah, that's kind of
that's great.
Yeah. I kind of live by that philosophy is less is more. So.
And your background is in legacy finance, is that right?
Yeah, traditional finance, and then I work in corporate treasury currently.
Okay, awesome. Yeah, I'm sure we'll come back to that. Rachel, what's been going on with you?
I feel like I've kind of disappeared a little bit this summer from crypto. I definitely have taken a bit of a step back, but I actually rebranded. I am no longer Fashion Coder, and I'm just going by my full name, which is kind of different, right? Definitely a step forward in some direction. But yeah, so it's been super cool just changing all of that. And obviously this was a huge, long process of deciding this because I loved Fashion Coder, everything. But yeah, I have rebranded just to being me, I guess. And so that's probably been the biggest thing that's happened for me in crypto this summer, but also have been watching the charts and just looking at things like that. So nothing too big when it actually comes to crypto. What about you?
Cool.
How are you doing, Maddie?
Oh, life is good. Well, I came under fire on Twitter a little bit recently, but that seemed to actually get cleared up now that I've presented all the facts, and I actually ended up learning a lot from the haters doubting me, and then I had to double down on what is the evidence behind different liquidity movements and that sort of stuff. And so luckily, yeah, today seemed like another breakthrough in that regard. But the thing that I'm probably the most excited about is something that came out of the connections that I made at the Ethereum conference that I went to just a couple months ago in Austin, Texas, which is one of my favorite places to visit. Also, Nashville for the Bitcoin conference coming up is also one of my favorite places to visit. When I was in Austin, I ended up meeting the founder of the crypto coins that they're like physical 1 ounce coins that have a seed phrase laser etched inside of them. And I've been using these coins as an onboarding tool for over 120 friends and family that I've gotten into crypto over the past 6 years since I found out about them. And the guy who started the company, Cold Storage Coins, he's the one who invented the Bitcoin logo. So people who have seen the Bitcoin logo as more than just a B, but it's a coin with circuits on it and a B. That's him. He's the one who came up with that back in the day. And so, I don't know, maybe I'll also give them some free marketing or something. I'm really passionate about their product, and so it's really exciting to know basically that the world doesn't know that Bobby is the one behind that, because he hasn't really emphasized it. But I think it's kind of a big deal to have a friend or somebody who's kind of having a business partnership or something. It's kind of a big deal to have that guy making a PulseChain coin, right? And so I've drilled down into every detail, designing the coin. This physical 1 ounce PulseChain coin you'll be able to use as an onboarding tool, and it'll sell on Amazon, and it'll just be really, really exciting. So we've been working with graphic designers. I spent a couple weeks working on the packaging to make sure that there's a guide that goes along with it that teaches people how to get into crypto, but then also onboards them into the community. So I probably listed 30 different YouTube channels in there as well. And so, it's really exciting to have something that I know will possibly create an aha moment for people. And there's an example of somebody who reached out to me who's, he's got some sort of a Gary V NFT that gets you into a secret meeting of celebrities once a year. And they're only doing it for 3 years. This is the 3rd year they're doing it. And I'm going to hook him up with a bunch of these coins too, so he can onboard a bunch of celebrities. So yeah, it should be pretty cool. And that, they've already minted 1,000 of these coins, and we're just working on the packaging. So they should be available in the next 2 to 4 weeks. I thought I was going to have them by the Bitcoin conference, but not that fast.
That's super
so
cool. Is it going to be available to the public or just a limited edition?
So great question. I think that the first mint is only 1,000, and those have a first edition stamp on the front of them. And then, we can make tens of thousands of these, I think, as long as they sell out and everything. And of course, this brings up something that both the Ethereum ETF and the cold storage coins have in common, which is not your keys, not your coins. And so I've actually printed instructions in the booklet to help people understand that without using Time Pays Me to set up a second seed phrase, or without just using this as a tool to start out with $20, like it's not real crypto. But for a lot of people, they have to hold something in their hands to be able to associate like digital value with physical value. And so, so like my software, Time Pays Me, will allow people to take self-custody of a key that they didn't create. And the chat's like, calling this out too, which is great. I love that my audience is, like so worried about self-custody, because that's a big deal. For me, my first Ethereum, I still have my first ETH that I ever bought in 2016, and it was $20. ETH was like $13 at the time, but there was a $7 fee. And, so now here we are on a historic day, so a lot of times people might only be starting out with a really small amount of money, but if you don't get them in with their $20, then they're not going to like become somebody who devotes their life to this or puts their life savings into it, or all the things that I've done. Right. So, so shout out to everybody who's like, who's questioning like the key control and everything. But yeah, it's basically, it's a coin that basically allows people to get started. And then the instructions that I've put in there really explain how to get a Trezor, how to write down your seed words, all those good kind of things.
Super cool. It sounds like to me, it's like a memorabilia type of thing, put that to remember a certain moment in history. That's how I kind of look at that. I think it's pretty cool. That's why I want to know if it's open to the public, because I want to buy one myself.
Yeah, it totally will be. And but then I'll challenge you to get two and give one away and see what the effect is of giving them away. Because as I said, I've given away like 120 of these. I still have another 100 of these Ethereum coins that work on PulseChain. And it's not something that you should put a lot of value on, but when I look at how I got onboarded and how a lot of other people have been onboarded, it wasn't by learning something that took 3 days to learn and then putting your life savings into. It was taking a tiny step, another tiny step. And with the instructions that I've got, people will be able to take the coin, scan a QR code, and then use Change Now to buy up to $1,400 of Pulse with their credit card. Again, not something that you would do with your life savings, because you're going to pay like a 4 to 7% like a fee. But the fact that you can just go to one website and plug in, your details as you normally would, and then the Pulse, is on the coin in quote unquote cold storage, that's what we need is like a one-stop onboarding type of thing.
I love the detail of just hearing like all of the things that you thought out, because that really matters, especially with onboarding people. So good job. That's so cool.
Thanks. Yeah. So yeah, that's what I've been up to, is like amongst all the other things. And another big deal, kind of a story that keeps evolving, is this Bitcoin conference that's happening. Rachel, do you want to lead into this story of like what's going to happen in Nashville?
Yeah, absolutely. So there is going to be the highest of stakes booth at the Bitcoin conference, which is really going to be awesome. And I'm going to be manning it during the conference. So if you're at the Bitcoin conference, you absolutely, first and foremost, should come to the booth, because it's the coolest movie. And then secondly, I would love to meet you, so I'm going to be there too. So it's going to be awesome just being able to be at the Bitcoin conference to, represent just, a crypto movie in general. Like that's so cool that there is a movie like that. And then also, talking about Richard Hart and his products within Hex and PulseChain and all of the things that go on in that world.
Like yeah, it'll be so interesting for you to get to meet all the people who maybe have like a positive or a negative take on Richard. What do you think it'll be like if somebody comes up and is like, oh, like that scammer Richard Hart?
I feel like people just don't really talk to me that way. And so if it does happen, it'll be totally fine. Like I'm chill and mellow, whatever. And it'll be an interesting conversation. But also at the exact same time, like I don't know, like I have a feeling that there will just be amazing conversations, whether they start out positive or negative.
Totally. Yeah. And what you'll find at a crypto conference is that everybody who's there cares so much about crypto that they spent $500 or $1,000 or $1,500 on a ticket to a 2-day event or 3-day, depending on what type of ticket you got. And they're crypto enthusiasts like us. There's, I believe, is it going to be like 20,000? There's going to be a crazy amount of people there. I think at least 20,000, maybe more. And so you're just surrounded by all this like super high energy. About half the people who are there are representing the industry. So they work in crypto full time. This is their job. They are there to network, to tell you about the products that they have, everything you can imagine. And then the other half of the people are just, holders. They're enthusiasts. They're interested in learning about what's new in crypto and meeting people who are like them. A lot of us, like in crypto, we're, spread out all over the place. But when we all get into one place at the same time, it's a blast. This is going to be my third Bitcoin conference in a row. And what was it? Last year, I was, my collarbones were broken. I still went. So
Dedication. The dedication.
Yeah.
Love it.
That's commitment right there.
And one of the things that the Hex and PulseChain community did the first 2 years at the Bitcoin conference is we like had a bunch of meetups ourselves, and then tried to like infiltrate other groups and like onboard people. But this year, just like the Ethereum conference in Austin, there's more of a focus on getting out to other communities. And so, I haven't lined up a 48-hour live stream. Well, to be fair, PulseChain launched on the same weekend as the Bitcoin conference. What was that, a year ago? So to be fair, that was like, that was like a PulseChain centric event. But this idea that we have an opportunity now to go out and find the one whale who can make the difference in the price chart, or to find, 100 really cool people who, deserve to be in the future of crypto, that sort of thing. But, this idea that it could be just one God whale level person who, who recognizes the authenticity and the organic nature of our community. And I know when I was in Austin, people recognized that I acted differently than other people who are like just doing it as a job, because they can tell my enthusiasm. And so I think all of the people who are there from Hex and PulseChain are going to, be networking all over the place, but we'll have the highest of stakes booth to meet up at and to visit. And then also we'll have, there's an event that Big Kirkowski is putting on for like 2 or 3 hours one of the nights. And so if you stop by the booth on the first day, then you can find out like where that is and get the free invitation to that. I'd assume.
Yeah, it's going to be fun. So definitely, if you're going to be at the conference, come by. And like you said, Maddie, it's going to be such a good networking opportunity for all of us. And I feel like that's something that, most of us in PulseChain are actually really good at going out and getting into other communities and being like, hey, like I actually have something that like is awesome. And then telling them about, what we believe in over here too. So it's just going to be a great event and the passion's going to be high. And I think that that's one of the coolest things about crypto is you get to go to events like this and get to meet other people that think very similarly as you do because crypto rocks. And so
Yeah.
being around people like that, it's going to be so much fun.
There was some breaking news on Twitter just tonight that it's believed that Kamala Harris will be speaking at the Bitcoin conference as well. And that's a big surprise to me and to lots of people. And it means that there's the top three candidates for U.S. president, Donald Trump, Kamala Harris, and RFK, Robert Kennedy Jr., they're all going to be there. And so, and I think Vivek is, so really, I think it's the top four actually, because Vivek Ramaswamy will be there too. So this has never happened before. I could tell you 2 years ago, I believe it was in Miami when RFK was there. So or maybe that was a year ago, but anyway, he's spoken there before, but to have the top two candidates from the top two parties both speaking is going to be wild, especially given the fact that it's exactly 2 weeks after the assassination attempt on Donald Trump. So it's probably going to be super high security but it really marks a huge landmark in crypto history with the fact that they used to ignore us and fight us, and now it seems like they are trying to get our vote. What do you guys think of that?
I mean, it's smart, right? Like, it's a large part of the population who wants to be in crypto. Like, it's stupid if they don't do that.
Yeah, I'm curious on the last minute motive behind Kamala making that appearance. That's I have my own theories, but I think that's for a different discussion. It's interesting to say that because those who are PulseChain supporters and holders and investors have to understand that Bitcoin and what today's big historical event with the Ethereum ETF launch, those are all big components for the crypto space, but they're also big components of PulseChain, PulseX, and Hex. If there's any crypto that we relate to, it's going to be Bitcoin and it's going to be Ethereum. Bitcoin because what Richard did was follow the same principles and philosophies of Satoshi, which is freedom of speech, not your keys, not your coins, and self-sovereignty and holding possession of all your money. All of that was to eliminate the third party of the middleman. That's Satoshi's vision, and that's what Richard carried on because he saw for 10 years that there was so many different people taking money from retail by creating these entities, right? And then Ethereum, obviously, because we're a copy of the Ethereum network. So if we can build relationships with the Bitcoin community and the Ethereum community and educate them and not bicker at each other like people do on Twitter and talk a lot of mess and just explain the purpose behind and what's the goal behind the PulseChain community, you'll have a lot of people that are open-minded. But you also have to encounter a lot of people that are they're just closed off, they're maxis, and they don't want anything to do with anything else. Sometimes you can't really penetrate that type of mindset until they see it for themselves. And that may take 2 or 3 cycles, right? So I advise people to maintain a logical mind when it comes to networking. Don't get emotional. Don't talk people in a different type of way. Just feel how they are when it comes to being receptive of new information, and then slowly like ask questions that bait them. Ask them like, hey, what was the purpose of Bitcoin? And you can kind of gauge their level of intellect, because if they say, oh, crypto is just make money quick, well, then you understand, you now understand that they don't understand the macroeconomics perspective of it. But if they kind of answer those questions of what was written on the white paper in Bitcoin and Satoshi white paper, eliminating the banks, the solution to inflation, the macroeconomics perspective, being a hedge against the US dollar or native currency. When someone is able to articulate those things in a very concise and precise manner, that's how you know that they understand what is going on. And when individuals can have that conversation, now you tie it back to PulseChain. You're like, okay, well, we have that same philosophy here, and that's one day when I start networking in person, that's hopefully what I want to attempt to do. But until then, we'll see.
Yeah, and networking in person it's a lot different than networking online. At least in my experience, anybody who pays hundreds of dollars to be at an event, they're there because they're so enthusiastic about crypto, and they're overwhelmed with positive emotions that there are other people who care about crypto as much as they do. I've found that talking to hundreds and hundreds of people at these events, that if they had a negative impression of Hex or PulseChain initially, they almost immediately don't have a negative impression once we start talking. And so there's it's almost like it's almost kind of like a proof of stake type thing. Like, if you're going to be a troll and rude to people, you're not going to spend hundreds of dollars on an event to do so. And so there's there may be some like connection there with and then also the fact that, like, people who are in person are kind of, they're just more responsible with and respectful with their words and everything. But the fact that I've only ever met one person who was super rude. Well, two. I've met two people who were super rude in person because of Hex, and one of them was like, "Oh, like, Richard stole your Ethereum. Like, what happened to the ETH?" was one guy. And it was funny because we ended up making tons of the same friends throughout the entire conference. And so he kept running into me, and like everybody was trying to introduce me to him like over and over again. And he just got worn down that way. And then the other guy was Jimmy Song, who is this like OG Bitcoiner that wears a cowboy hat. And he's a dev and a YouTuber. And so you could think like kind of like Ivan on Tech, except a Bitcoin maxi. And he, like, I ran into him at the first Bitcoin conference, and yeah, he was like, he saw my Hex logos and he was like, "Oh, blah, blah, blah," like talking smack about Hex, but he didn't really have any good points. And I guess he was in the middle of filming his own documentary, so maybe it was good content.
Drama. Everyone needs some drama in their docs.
Normally what I found is that, like, even all the Bitcoin celebrities are very approachable, and they like are welcoming of taking a picture and like saying hi and having a little bit of common ground. I haven't necessarily done like a hard shill with any of them, but even Mike Novogratz, I took a picture with him, posted it on Twitter, and now he follows me on Twitter, which he's a big deal in, like, the crossover between crypto and legacy finance. So yeah, we're getting there.
Slowly but surely. We will get there. Well, I'm going to have to jump off, but Maddie, I'm so excited to see you. I will see you in 2 days. And
Yeah,
Frank, so nice to see you too. And it's going to be so fun to see what happens with the Bitcoin conference. It's going to be great.
totally.
Indeed.
Thanks for having
Y'all,
me.
good luck.
Yep. Thanks for joining us.
Bye.
All right. Yes, that kind of wraps up. I guess the what's the other thing? Richard's been posting a lot.
That's always a good sign.
he had some bangers. What did he say today? It was that Michael Saylor had not too long ago, I mean this year, at the MicroStrategy conference that they held, I guess mostly online, but a little bit in person. He said that Ethereum will never get an ETF.
Oh yeah, I saw that.
And that everything is going to be called a security by the government and all this. And I'm not going to play it, just in case of copyright. But yeah, Richard said "F you" to Saylor on Twitter and got 2,000 likes and 600 retweets. So there you go, showing receipts, huh? So yeah. So that kind of wraps up like our segment on what's going on for the conference. And if Big Kurkowski ends up hopping on later on, we can circle back to like whatever alpha he has on the topic. But I think I'm going there on Thursday, and like I've streamed every Thursday for over like 180 weeks. So you're definitely going to get an update from me in Nashville. And then even though it won't be a 48-hour live stream, I'll probably do another update just to, to make sure everybody's in the loop. I'm sure some exciting stuff is going to happen, and maybe we'll see some wild political stuff. Maybe Donald Trump or Kamala will, announce that they're going all in on crypto. So, or they're firing Gary Gensler. That'd be cool.
Yeah, there's going to be some drama for sure. For sure.
So that'll be good. And Frank, I'm excited for the audience here who, are a lot of whales and dolphins and sharks, people who have been, really deep into Hex and PulseChain from the beginning. The people who watch this channel are, I think are going to benefit from some of your insights and conviction when it comes to PulseX. And so I want to hear more about your thesis there, and more about like your background and how those two things fit.
Yeah, so my background is traditional finance. So I went to college, long ago, in my early 20s. I'm in my late 20s now. So I studied finance in college, and I fell in love with traditional finance. I studied everything from Warren Buffett to, some of the biggest Wall Street traders there is, Jim Simmons. I've spent like years actually trying to replicate Jim Simmons' strategy.
And what was he known for?
He was a co-founder of Renaissance Technologies. So he was known as probably one of the greatest traders of all time, using mathematics and statistics. So he was a mathematician. So he brought that same ideology into Wall Street, and he created algorithms, and he created a hedge fund that basically outperformed the market. So anything from him to Ray Dalio, Bridgewater Associates, to Warren Buffett, and I credit my success in crypto to the philosophy and ideology that I learned from those individuals many years ago. Close to a decade ago. So I would say, coming from a Wall Street background, when you have practice discipline, and you have practice patience, and you have practice education, and that's where I have a big advantage, because my time horizon, I'm so accustomed to thinking 20, 30, 40 years out. And I come into crypto and people are anticipating, 1, 2, 3 years out. So that when I came in and I saw that space, I saw that big spread between the two time horizons and time frames. I use that to my advantage. And a lot of the things about traditional finance, people think that it has a lot to do with intelligence. It really has nothing to do with intelligence. It's just discipline. It's discipline and patience. And when I first came across crypto back in 2017, my first attempt was I wanted to create a algorithm that traded the spreads between the exchanges between Bitcoin and Ethereum. So at the top of the 2018 cycle, I wanted to create the algorithm that traded those exchanges, and I would be able to pocket on the differences. So arbitrage trading. And I had a whole, Excel sheet going on, and I was going to hire devs to kind of put it together, but it just never really came from it, anything after that. And I was so heavily into
what year was that?
The top of the 18. So like 17, 18. Yeah, 17, 18. And I didn't pay attention to what Bitcoin was. I just kind of knew it was like, oh, it's this thing that people are trading. And I was not going to deviate away from traditional finance, but I wanted to find a way to capitalize it. So I never studied what Bitcoin was. And fast forward, like 2020, around COVID, 2021, I went into derivatives trading, FX trading, leverage trading, commodities trading. So all these, you can't trade these commodities, you can't trade these assets on US regulated exchanges with more than a 1-to-50 leverage. So I was trading with unregulated brokers, using Bitcoin as a funding method, with brokers from like the Cayman Islands and stuff. So it was very sketchy stuff, but it gave me the leverage that I needed. Right. At the end of the day, during that time, I tried to trade my way into crypto and trade my way into other assets. And I lost like thousands of dollars. And I think at one point when the price of oil tanked, I remember I had a position on gold and it went against me and I lost like 100,000 in a single day. Right. So you kind of develop this muscle of tolerance of whenever you see your account evaporate 100,000, you can have this realistic pain tolerance when it comes like, okay, well, I've survived that. I can survive to anything. So then fast forward like 2021, my friend heard from someone say, hey, look into this PulseX thing. And I'm not going to tell you what to do. Just look into it and you do what you want. And then like a couple months later, he told me about it. And I'm like super skeptical at this point. I didn't really look into Bitcoin. I didn't look into Ethereum. I had lost money in, day trading. And I wasn't about to try this new up and coming PulseChain thing, right? So long story short, PulseX Sacrifice came out and I decided to put my annual bonus that year into the Sacrifice. And it was a couple $1,000s. And I said, if I'm going to put money into this, I'm going to go research and study exactly what it is. And I spent the next 2 years, which a lot of people think that 2 years after the Sacrifice was a bad thing. To me, it was the biggest blessing ever. The biggest blessing ever, because it gave me time. It gave me time to just go read, watch videos, watch a bunch of content. And I milked it because I would be at work. I'd be on the clock doing my night task on my desk. And I'm just listening to K4K. I'm listening to Crypto Coffee. I'm listening to your channel. I'm just listening to all these people who are much smarter than me in this space. And I'm just absorbing all the information. And I'd go home and I'd drive home and I'd be listening to it on the way home. So I was just educating myself for 2 years. And finally, when it launched, I was ready. I was like, nope, I'm going to just DCA, clips, just boom, 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 boom. And I'm a big believer that if the price moves up way too quickly, way too fast, that's a bad sign. I learned that from traditional finance. So when I saw that it launched last year and then it went up to like sacrifice price within a few days, to me, that was a big red flag, right? So I knew there was something coming. And then when the SEC hit them with the lawsuit, I knew that was like, okay, perfect. This is going to be an opportunity where it's just going to tank, it's going to sell off, and it's going to be perfect buying opportunities. So I spent the next several months just DCAing clips and clips and clips and clips. I like to measure my portfolio at sacrifice value. So, because that's when I technically first bought in, right? That's when people consider the IPO, whatever we want to call it. So when I measure my portfolio value, I calculate it at 3 zeros and a 1. And it's like a psychological thing for me, is like, this is what you have to value it as, because if you value it as this, you're not going to be thinking about the FUD and all this different stuff and, you know, all the shit talking that people are doing on Twitter.
You're getting a deal. You're getting a discount if you value PulseX at 3 zeros and a 1, which is about 4 times higher than it is even today.
Exactly. So then that's when I really started to change my mindset when it came to continue to DCA at the bottom, which I was just, every time I was buying, I calculated that at sacrifice. So to kind of like get into the point, I spent 2 years studying Bitcoin, Ethereum. I spent 2 years studying Michael Saylor. I spent years studying the macroeconomics, the monetary supply, the inflation. What was the solution that Bitcoin solved? And then why did Richard Hart want to continue that philosophy? So then I put it all together, and then that's what kind of gave me the conviction that I needed to just, you know, I don't need to be in anything else. I don't need to be in traditional finance. I don't need to be doing some sort of business. I can just devote my time to being an excellent person in my career, and then live below my means, and then put all that excess cash into this asset that I have conviction in.
That's amazing. That's very incredible. And that's how crypto should be done, is, you know, focused on by productive people who are living below their means and who are, like using it as a store of value and, you know, something that can be part of the future on a long time horizon, not a super short time horizon of 1 day or 1 week or 1 year. I did, you know, I did something similar myself, but please continue.
Yeah, I mean, I think the people who do it that way are the ones that are successful. And what you mentioned right there, store value, you have to be able to see it as a store value. You can't see it as your ticket to riches. You can't see it to it's a lottery ticket, like a casino ticket, or, you know, a get rich quick, because those are the people that get wrecked. Even when you have golden assets, even when you have the golden ticket in your hand and all you have to do is wait, they still manage to fumble it because they have different expectations. They shorten their time horizon. They have this very microwave mentality. And that's why I said, like, the reason that people like who come from traditional finance and they have this viewpoint of 40 years, the reason why they're successful, because to them, 5 to 10 years is such a short amount of time compared to 40. Right? So the people who are successful in Ethereum and Bitcoin, who held for 10 to 12 years, they're the ones that are very successful because they come from a perspective of, I have to wait 4 years to retire. Oh, wait, now I can make millions in 10. So that the risk to reward is absolutely a no-brainer, especially for someone who doesn't need their investments to pay out tomorrow. If they put in 5 to 10,000, you know, 5 years ago, they could easily turn that into a couple million by waiting. Today, the Ethereum ETF, this is possibly the biggest accomplishment for the people who are early adopters. It's the exit plan. It's the goal. Like, whenever you have a crypto, what is the end goal for your asset? For us, what we consider the biggest win is the day that we finally get our own ETF. Right? We get to show to the world, hey, we've been here, we're not going anywhere, and we have our own ETF, and that day's going to come. But how long did Ethereum have to wait? 8 to 10 years for that to happen?
Yep.
Right? But see, each cycle, these things get shorter and shorter, right? So it took Bitcoin the same amount of time. The Bitcoin and Ethereum ETF launched in the same year, but it took Ethereum significantly less because it launched after Bitcoin did, right? So as the cycles go on, the days for you to get your ETF launch is going to be shortened. So if we carry on the same trajectory, it could be possible by next cycle, PulseChain, once we beat the SEC this year, by next cycle, we could have our own ETF as well. And that's what I want people to think about when they think about the long-term perspective. But how is it possible for you to be able to have that mindset and that conviction? How is it that I'm able to speak so passionate about you? Well, because I spent over 1,000 hours studying this, and you're going to have to, the people who are going to do that, they're the ones going to be successful. They have to put in the work. They have to put in the time and effort. Just like you do in any business, just like you do in any investments outside of crypto, you have to put in the time and effort. The only time where you can skip that is if you get lucky, and the people who get lucky, they get it and they quickly lose it. So if you want to keep it and maintain it, you got to study it.
And it's mathematically true that the majority of people can't buy the bottom and sell the top, because otherwise it wouldn't be the bottom or it wouldn't be the top. And so it's the people in Hex who sat through the most dips who did the best, historically speaking, as with other cryptos that have not died, grew adoption, had people who stuck around for many years. In Hex and PulseChain, you have people who time locked for better or worse. They married their bags for 15 years, and that creates an incentive for them to keep sticking with one thing. And luckily, that one thing has, been something that continued to perform, and the founder continued to tweet every day about it, and the community was strong enough even without the founder. So you've got you've got the example of my first Ethereum that I still hold, that started at $20, then it went up to $4,500 what, 3 years ago, almost 4 years ago. Well, 3 years ago now. But I didn't sell. And now it's at $3,500. It's lower than it was years ago, right? But I don't care about that because I'm thinking long term, and that there's different ways, there's different strategies that people can use to not be emotional and to take profits when they need to hold when they need to. And Frank, you've also, I think, talked about that in some of your streams in terms of not just the long-term vision, but the emotional control that you have.
Yeah, the emotional control comes from the discipline that's developed through just years of experience. And sometimes you can't train someone to do that. They need to go experience it themselves. But the people who take the time to listen to content, creators and streamers, and they absorb the information. They say, you know what, I'm going to go teach myself this, and I'm going to go listen to what this guy has to say, and I'm going to go do my own research. And then they go down a rabbit hole, and then they end up discovering, man, money is not real, and yet I have none. And then they get even more mad. But then you have the decision to make. You can either become someone who takes action and takes the accountability to correct that and become wealthy on your own, or you bitch and complain. And a lot of people who bitch and complain are the ones who don't have anything. Like, a lot of people like to throw to me in my face, oh, Hex is down 99%, 98%. I don't think people understand that we are up 100x even after the biggest thing that could have killed us, and we didn't die. That's a flex. I want people to understand that. We're flexing. That's a flex. That's a crypto flex. The fact that the SEC came after us, that we're down 99% and we're still up 100x from the bottom. Correct. That's not something to be bashing about. That's something to be prideful. And even after that, the community is growing. The statistics and the fundamentals of the community is growing. The social media engagement is growing. So when you extrapolate out and you look at the facts and you don't get emotional like some people on Twitter, you actually have a lot of opportunity to get on positions that most people would be killing to buy in the next 5 years from now. And you can't teach someone that. You can't teach someone and say, go do this, go do that. They have to go and educate themselves so they can have the desire to do that. But in order for you to do that, you almost have to detach yourself from money. You have to emotionally detach yourself from money. And the only way you can really do that is if you don't rely on it, which is the people who are long-term investors that succeed because they don't have that emotional connection to money, because they don't expect that to be taking profits in the next year or 2 or 3 or 4 or 5 years. They expect that in 10, 15 years. That's why these silent big whales that come from Wall Street, that they're low key, they don't have a Twitter account, no nothing, but they have $100,000 clips. They're just sitting back and they just buy and hold because they look at the statistics, they look at the facts, they look at the fundamentals, and everybody on Twitter who's crying, that's retail. So I get very passionate about it because I know what I hold. And
Yeah.
I don't like to convince anybody, hey, go buy it. No, I like them to read my passion. And then they have to ask themselves, why is this guy so passionate about this?
Yeah.
So.
Yeah. When you're valuing your PulseX at SAC rate, almost 4 times higher than it is today, and then you see it drop down when it was at its all-time low of 10% of SAC rate or something, you saw that as an opportunity. Your emotions told you that you were getting a deal, whereas the majority of people's emotions were telling them to sell the bottom instead of buying the bottom. Those are two opposite things. And so I think your kind of vision of how you value it, it reminds me of the way that Johnny Chaos looks at Hex.
Yeah.
How he values it higher than what like the suggested retail, what the last trade was. And those are the people who have a totally different emotional experience and are probably able to do a better job of investing and getting a good deal. Whereas the majority of people, they're looking at when the price goes high, and that's when they want to buy, is when it's already too late to get as good of a deal as somebody's getting today.
Yeah, and I mean, like going back to TradFi, there was a point in the early 2000s during the dot-com bubble where Amazon dropped 99%. 99%. The stock price dropped 99%, but the value of the company wasn't dropping 90%. So the fundamentals of the companies were all going up. And Jeff Bezos said it. He's said this in multiple times in different interviews. Is the fundamentals of the organization were going up while the stock price was going down. So you take that same ideology in what we're in right now, 99% drop on Hex, but the fundamentals and the social media engagement and the community growth are all going up. So there's a decorrelation between the ticker value, right? So the asset price compared to the fundamentals of the asset, of the underlying asset. And the people who focus on the price are the ones that lose, because they're either gonna sell based on emotions or they're gonna buy based off of FOMO. But the people who focus on the fundamentals are the ones, those are the investors. Those are the ones that they do things based off of logic and statistics and probabilities. The PulseX video that you're referring to that I talked about a few days ago, I use very specific terminology in that video because nothing of what I do is based on my emotions when it comes to decision making. Everything is based on statistics, probabilities, and facts. So when people say, oh, Richard Hart has 170,000 ETH, and at this price, he's going to have $1.7 billion to deploy, when I look at the facts, I don't say, oh, it's guaranteed that he's going to buy up his bags or his assets, but I look at the probabilities of it. What is the probability of him doing so? Well, I believe based on the facts that I'm presented, that there's a high probability that eventually $1.7 billion is going to flow into our community. Right? So you have to change your perspective and not get emotional. Try to remove emotion from investing, because emotions in investing, you will never, never, never succeed. And, making decisions based off of data, I'm a very analytical person, is what allows you to think outside the box and think in a different way than the sheep, than the majority, than the people who are just following in at the top or buying at the or selling everything at the bottom. So I'm a big advocate on looking at the data, looking at people who are smarter than you. Everything that I talk about, from what I tweet to what I say about in my videos, comes from someone who is significantly smarter than I am. All I do is take the information, repackage it in my own way, and then spit out analogies and metaphors that are aligned with my knowledge and my experience. That's all I do.
So yeah, I think that's a great characterization of your mindset and your winning mindset. If you had an elevator pitch to give about PulseX, how would that go?
Well, first question I want to ask you is, what is the education level of this person that I'm in the elevator with? Because that has a lot to do with the pitch that I will be talking about.
Let's go with somebody who's a multimillionaire in, you can choose either crypto or legacy finance.
Okay.
Traditional, I mean.
Are they knowledgeable in monetary supply and debasement of currency?
Yes, but they're not
Okay.
knowledgeable. Let's say they're not knowledgeable about crypto, but they are knowledgeable about money.
Perfect. So the first thing I would do is I ask them how much, well, first thing is like, how would you value US dollar, right? Your native currency. And if they say, well, I know it ain't shit, I have to hedge against it against the, with an asset. Then they usually say they're real estate or stocks. And then you tell them, okay, do you believe that those asset appreciations is because of value or because of money printing? And if they, based on that answer, it gives me the level of understanding of how intelligent they are. If they say based off of value, then I know that they're still kind of like in the financial matrix of what I like to say. They believe that price appreciation has to do with value, which is very, very rarely, because the S&P and house appreciation is actually directly correlated to the money supply.
Yeah.
So if they say no, well, of course it has to do with the money supply. Well, okay, then. So then what is the alternative to those assets that has nothing to do with real estate and stocks? And then most likely, if they know that answer, that the appreciation of those two assets is based on monetary debasement, then they're going to say, well, Bitcoin. Well, okay, good. So, well, Bitcoin solved the problem, and then crypto happened. And then crypto was a whole bunch of bullshit that took a lot of money from retail by creating fake entities and fake securities. And essentially what they were doing is they created companies that had nothing to do, that didn't have to go through the SEC to be regulated to raise capital. Okay, so they issued a token, they raised capital without having to go to the SEC. So that defeats the entire purpose of Bitcoin and the entire purpose of decentralized finance. Fast forward 10 years later, Richard Hart comes with PulseX, PulseChain, and Hex, carried that same philosophy, but improved the old technology of Bitcoin. And they were like, okay, so you're saying that PulseX, PulseChain, and Hex carry the same philosophy as Bitcoin. How so? Well, then I go into whatever asset I want to talk about. In my case, it'd be PulseX, and be like, the reason I like PulseX is because it carries the same principles of Bitcoin, which is decentralized finance, self-control of your assets. Nobody can take it away from you. You can yield your own rewards. And two, I tie it back to like a stock buyback in traditional finance. The company buys back its stock, reducing the overall supply in the market, and pushes the price up. But instead, in this way, not only does it buy it, but then it burns the existing shares after it's bought. So it creates buy pressure, and then at the same time reduces the circulating supply, which over a period of 10 years is going to push the price up. And as long as the money printers are still going on, all of that debasement of currency flows into Bitcoin, which eventually flows into DeFi, which eventually flows into PulseX. So you wait long enough, when you have an asset that trades against native currency, that asset that trades against native currency because of monetary debasement pushes the price up, and that's your hedge. So that's how I would pitch it. But that's assuming the guy understands all of that. Yeah. That's why I'm not good with talking with people who are very beginners. I don't know how to break it down for them in that way. It's very difficult for me to do so.
I feel you. That's that's something I've run into as well, which is why I'm creating this coin, this physical coin product to help onboard people that way. Look, we have another special guest here, Fast Abdul. Welcome.
Greetings.
Hey, bud. How you doing?
Good. How you guys doing?
Good.
What are we talking about? I just tuned in.
PulseX.
Oh, okay. I've heard it. Nice.
Frank's a fan.
Yeah,
big fan of it. 99% of my crypto holdings are PulseX. So,
well, you're looking good. Last couple of days, that ratio to Pulse has changed quite a bit, right?
That's another bullish indicator. I was talking about that a few weeks ago. I have screenshots to when it was always trading a 1-4 when it first launched.
Yeah.
So now that it's less than 1-2. And I think there was a Creator Crypto. I gave them a shout out in my video. I'm gonna shout them out again. They produce some fantastic content. They had Access Alive, and Access Alive was telling us that there's a possibility that by this cycle, PulseChain and PulseX might reach a 1-to-1 ratio. And for those who are bullish on PulseX, that's a big indicator, because people have mentioned that the DEXs are not going to do as good as a layer 1. But you understand that if it reaches a 1-to-1 ratio, the DEX would be as valuable as the layer 1 PulseChain. And that's how I carry my ideology behind that.
PulseX is deflationary, where Pulse is inflationary by the nature of what it is, right? Which is fine. But yeah, if it hits the 1-to-1, then it can only get better with the buy and burn, right?
Yeah.
You know what? Actually,
and you're not going to get that with Uniswap being a duct taped on a token that isn't related to the actual earnings of the smart contract technology versus PulseX that is. That's why you might see a first in crypto history of something on the chain being worth more than the chain itself. I'm not aware of another instance of that in crypto. So that would make history.
Yeah, for sure. Do you know what makes me bullish on PulseX? It's not that awesome as far as the technology goes. It could be improved, and the room to improve it is there, and the technology to improve it exists. So the fact that it's doing as well as it's doing, when it's, it could have a lot of bells and whistles added on, would mean to me that there's definitely a huge upside. Like just some of the maybes that we could see attached to it that, people have talked about, maybe even Richard's talked about, and ideas in the past, stuff like, having like a privacy options connected to it. What if the ink token ends up being a DAO token that you use to vote for which pool gets to farm next, that kind of thing? Like all that technology exists, and all of it could be compatible with PulseX, but it's not there yet, right? So it has
it's there and not being used. The YAMS governance protocol is built into ink.
Yeah. That's cool. So that, like, think when that stuff happens, if the price is going to hit 1-to-1 without that, what happens when there's suddenly like 5 times as much utility as there is right now? That'd be cool.
And that's interesting game theory that those things haven't been deployed yet. You don't have single-sided pools. You don't have limit orders. You don't have all that good kind of stuff, some of the bells and whistles. But, if some of that stuff starts to appear once the people are done selling below SAC price, at least, once we get a healthy 10x or something, then that could be even more rocket fuel. So why give people a better deal now when people aren't valuing it versus in the future? And so it creates like I guess an opportunity, and sure, people can people can be like Frank and take advantage of something like that, or they can complain about it and FUD their own bags. But the game theory still, I think, lines up for what I can see as something that would be really cool to see things come in once we're much higher.
Agreed. Yeah. And I think the marketing strategy of not releasing everything at once is just common sense, right? Like that's like any business, especially in crypto, we've seen that before, but like any business doesn't put all their cards on the table on the first day, because then you don't have any news for later. And like, let's just say that PulseX was a store in a shopping mall, right? And we're in July, right? Now, should they have their biggest sale of the year in July? Is that when they'll get the most bang for their buck for the advertising dollar, for whatever innovations that they have for that store? Or should they have their sale, spend all their advertising money, do their outreach in December, right? When everybody's coming to
Christmas.
buy anyway, right? The dollar goes a lot further. And I've spent some time, with, in business for myself, dealing with retail things. And like, yeah, you put all your money into between October and January. You try to spend $0 on advertising and that sort of thing, or even any particular innovations until the people are coming anyway. And then you try to get more than your share of the people that are coming, right? But like, if you're in a shopping mall and like you could have the biggest sale of the world in the middle of August and like nobody's going to come, right? And crypto is very much like that right now. So, in December, and that's not financial advice, that's just like a guess on my part, when crypto's really pumping, when Bitcoin is, let's say, $85,000, that would be a great time to announce the improvements for PulseX. Just saying.
Which aligns perfectly with after the court case.
It
And if
does.
anybody has a logical brain, understands that this guy's not fighting against the SEC to lose, so if things go well, everything is behind us after October. It's positive news. We already have precedent and merit that there's no possible way that PulseChain could be a security. So it's just a matter of a formal announcement by the SEC. So it's good to know that a lot of people have that long-term perspective and positive outlook on things. They're not emotional, which is a very, very good indicator of the community growth as a whole.
Yep. Agreed.
Yeah, and when people come to that shopping mall in December and they see all the stores that all the developers and founders are building on PulseChain, it's going to be like a hopping mall. It's going to be the place to be. So that's I think it's not just what people are banking on, that it's what they're planning for, right? Like, people aren't going to deploy like serious multi-level like $200,000 crypto builds on a chain unless they anticipate that crowd coming. Just like how you wouldn't open up like a big box store in a shopping mall if you weren't anticipating that it was going to have a highway running beside it and everybody would be filtering in December to buy, vacuum cleaners and stuff. I think that's where it's at. I think that the groundwork is laid out. We have the infrastructure for the shopping mall. The mall is almost full. Like, we have almost all the same stores that they have in the other big malls, like Ethereum, for example. Like, they're almost all here, except for our stores are cheaper, right? And the product is the same. So, I think we're set up for a win. So I know that analogy doesn't 100% make sense, but I think a lot of it does. And I think that's something that people can understand, is that's like, it is not shopping season yet. If you're buying now, you're buying at a discount, right? And when people come later, when they come in December, the price would be higher. So, and again, not financial advice. That's just an analogy to the shopping mall concept. But like, I think that could hold true.
It's interesting that you say that. Buying right now is discount. In the future is going to be present value, and next year is going to be premium, right? So those are the kind of the three phases. You're buying at a discount now when there's a whole bunch of FUD. Then there's going to be a market equilibrium where the price that's reflected is the price of the asset that it's supposed to be. But then there's going to be premium, which is all the FOMO, all the retailers. And that's when people who are planning to exit, whoever that may be, your first cycle, you want to be timing your exit when it's that you're paying a premium price, when retailers are paying a premium price. That could be the end of the next year. If we're looking at what Hex did 4 years ago, September of that last cycle is when you kind of want to be exiting. You want to use that as a benchmark. You want to use that as a guideline for the first cycle. People who are taking profits, that's something to look into, right? But those are the three phases that I like to measure where we are: discount, present value, which is fair market value, and then premium. Those are your indicators of the market cycles.
That makes a lot of sense.
There was a time in Hex when I guess I didn't know how to do chain analysis as well, but it seemed pretty apparent that the Godwill buying, really got the OA to match in a sense. And, so I don't know which one was happening first, but once you see the whales agreeing and fighting over the scarce supply of something, that's when you really get your takeoff. And that's why I was mentioning earlier in the program all it takes for the Hex and PulseChain people that are going to the Bitcoin conference is for us to just onboard one billionaire, right? Who becomes extremely enthusiastic, and then it's like, all the people who have $1,000 that are selling the bottom, they get swallowed up, and then you get to the next phase of the game. But for now, yeah, it seems like we've been going sideways, we've been going down, we've been going up, just kind of depending on whether you like buying discounts or not. And so there's been a lot of different different sentiments in the market, but at the end of the day, yeah, I think just the fact that we found out today both presidential candidates want to speak at the Bitcoin conference, that's quite a shift.
Yeah, it'd be crazy. Can you imagine if they were competing with each other on who was the most lenient on cryptocurrency? That would be that'd be awesome. Nice.
So yeah, which RH ticker is your favorite, Fast Abdul?
Probably Hex overall. Obviously I'm bullish on Pulse, etc. And my favorite kind of might change in the moment. I think Hex is the most undervalued one right now. And that's just my how I'm looking at it. But the immutability of Hex and what it does and the things people have built on top of it is what I really like, right? I like things like the Maximus DAO tokens that are tokens that represent staked Hex. I like the icosahedron contracts where you can lock Hex in a stake, but then have it be movable from one wallet to another, or even convert that stake into something else in the form of icosa by selling it to the contract. I like those extra things, like the communist thing, where you can get yield in a different token, or how you can get yield from Hedron if you have a Hex HSI. Like those extras, I'd like to see more of those extras built on top of Hex. And I think we will see more things like that. And I like the things that you can do with those extra tokens, like the concept of farming with Maximus DAO tokens, where you have basically Hex paired against Hex paired against Hex with almost no impermanent loss, and you're getting paid yield in something else. That's my game, right? And my investments in Hex are mostly in those kind of things. It's attached to Hex that's in an HSI via the icosa contract, Hex in the form of Maximus DAO tokens that I'm farming on something else and getting paid in another token. Those kind of extras where you can do more with Hex, because it is an immutable contract that is set up so that people want to build on top of it, want to add extras to it, want to build community around it, even outside of the Pulse chain as a concept. Some of these things, like icosahedron was here before the Pulse chain, right? Alex was already building that on top of Hex. So I think we're going to see more people doing things like that. And it is important that we recognize that those things are huge, that it's a big deal to have somebody like Alex building a massive complicated contract. I suppose he's coming out with a icosa V2. I heard, I don't know that for a fact, but those kind of things on top of Hex make Hex much more dynamic than just something you can stake for 15 years, which has its own utility. And you guys probably know that story way better than I do. But these extras are really sexy to me.
Yeah, totally. And all right, so I'll give a different answer than you guys gave to balance out the show here. I'm gonna say my favorite RH ticker today is Inc. And I didn't start out with that. I started out with obviously Hex being my favorite, and then I switched to PulseX being my favorite. Now I like Inc. So there you go. The reason I like Inc. is because it gives people a way to yield farm and earn 30% yield if they're pairing it with PulseX. And that's a cool story, because you're earning more Inc. So you're earning something that's denominated in something that's interchangeable with PulseX and Pulse and Hex to some extent. But the other cool thing is that, the farms, the Inc. farms, they're giving you a yield that's similar to Hex, but it's not, it's not way more. And so, it seems like that's maybe been set intentionally, which is cool. I think it offers something that people who don't want to be like paying their future self time locked into the future and that sort of thing, or people who already have that as part of their portfolio, can add this other part that's accruing daily and able to be sold. But then the other cool thing about Inc that I've realized is that in order to get the best APY in Inc, you have to buy Inc. And so that kind of helps make it possibly to not be a dump forever token, is because of the high amount of liquidity between the other RH tickers. Inc it's got like 30% of its total supply is in liquidity pairs with other RH tokens. So that's like a massive, like tens of millions of dollars of liquidity there. And so it's going to perform similar to other assets like PulseX. But once people realize that and they start yield farming it, in order for them to start yield farming it, they're going to have to take half their stack that they want to yield farm with and put it into Inc, do a buy in order to get the Inc to get that 30% APY. Now, if you want to get 30% APY in Hex, you have to make a different type of sacrifice where you're buying into something that has less liquidity, relatively speaking. So you're going to push the price against yourself, not terribly, but like more so than with Inc. And then you also have to time lock. And so it's presenting like multiple paths to earn a certain APY that's like meaningfully more than you can get in traditional finance. However, the amount of like new people who can come into crypto, is many multiples more than that. And so it seems like a system that could balance itself really well and be something that people, when they're sophisticated multi-million-dollar investors who are new, who are looking for something to do with their profits in Bitcoin, Ethereum, and Solana, that might be something that becomes more and more popular as we go further into the bull market, especially if, Richard talks about it, or anybody really, if anybody talks about it, not just him, like even us. So,
yep. Yeah, no, I think, and those people are going to come funny you say Solana, because there is now a large amount of bridge Solana on the Pulse chain. So, which is a new thing, right? So, which, I realize it's not exactly RH adjacent, but things like that, where there's Solana that's on the Pulse chain that's bridged over, it gives people from a Solana a reason to come here to do farming, which is likely something we'll see with that Solana. I think they can do leverage on it, things like that with the Fame protocol. And, once those people take some profit in their Solana and they're on the Pulse chain, there's a very high chance they're going to look at, some of the other things that we have. At the very least, there's a good chance that they'd run that profit via, PulseX or other DEXs on the chain, and that it would add to the ecosystem overall. So I think we're going to see more of that sort of thing, where because PulseChain is a copy of Ethereum and it runs so smoothly, that things like Solana are going to come over here, and those people who are farming their Solana, which is maybe the reason that they came over, they might turn and look and see these Inc farms, right? And if the APR is better on the Inc farm, good chance they switch, right? They're here already. The fees are cheap, So I think those kind of innovations that will bring other communities to see these products, to see these fees, and to get into things like Inc token are big, and that's going to make a difference.
Yeah, the value of Inc would be harder to dump suddenly than probably other like yield farming protocols on other chains that, didn't have as much liquidity set and that type of thing. Because you'd have to pull down, and this has happened before, where the interchangeability of Pulse and PulseX and Inc, if you have somebody selling one, it's similar to them selling all of them. And when you have somebody buying one, it's similar to them buying all of them. And so that's yeah, that's an important thing to keep an eye on. I think the PulseX Inc. ratio has stabilized, and now I've seen like other people comment on it too. So it's obviously not just me. I think Corey Geary and Dane were talking about them noticing the same thing I did in the chart, and so that's notable as well, because I was always somebody who had a great fear, probably there was justified, of impermanent loss.
Yep.
However, when you look at how the liquidity has been structured, sure, that liquidity could move, but the fact that there's tens and tens and tens of millions of dollars sitting there is telling you that it's not going to be just one person selling PulseX or one person selling Inc. that would necessarily cause that ratio to collapse. And so it seems that the ratio has been like becoming more and more stable between those two in particular because of their interchangeability.
Yeah, for sure. And where we see that, where you can tell, is actually in the APRs. Like if you look at the pools on PulseX, you'll see the ones that pay the highest APRs are the ones that are connected to stable coins, right? So it'll be like DAI from Ethereum against Pulse, or USDT from Ethereum against Pulse. Those are paying like 80%, right?
Yeah, 70 to 80.
Because you're going to, like, if Pulse 20Xs, you're only going to get a 10X because you'll lose 10X to the stable coin. You'll just end up with more stable coins. It's not like you'll lose money, but you won't make as much as you would have. Whereas something like the PulseX to Pulse pair, that's paying like 13.5%, 14% usually, right? And that's because that's probably one of the more stable pairs. And then the Inc pairs, Inc with PulseX, I think is paying around 30%, right? Which is, again, I think it's the one of the second or third lowest one as far as the APR. So it's only 30%, but your impermanent loss is way, way less than the Pulse to Ethereum or Pulse to stable coins. It's a safer position. When you think of that impermanent loss, I think it's important that people, and just like a quick review for new people, impermanent loss means one token goes down in price or up in price faster than the other, and you're left with more of the token that's worth less money, right? Your token count will change, and it will shift towards the token that is worth less money per piece. But when you look at that impermanent loss, you have to weigh the yield that you're getting against the impermanent loss. So like if the token price is shifted, the impermanent loss was 10%, but you made 30% in Inc token while you're up 20%, right?
Yep.
So what you do with that Inc token, like if you turn it into cash and took it to the bar, well, then you're not up. You should be doing something smart with it. But that's definitely a consideration, is that yield goes against the impermanent loss. So if you're getting decent yield, which on a stable thing like that, I think 30% is acceptable, then, that maybe it's worth the risk. But moderation is also a good choice. And because PulseChain is so cheap, you can do things in moderation. You can have $100 here, $100 there. You can, pull half of your yield farming position if you're worried about it and keep the other half in. The fees for each transaction, 10, 20 cents every time you press the button versus, $10 to $50 on Ethereum, means that diversifying your yield farming positions and doing things in smaller bits to sort of protect yourself from changes just by having a more diversified position is totally sustainable.
I want to ask you more about that, but I know Frank has to go. And so I want to thank him for being on the show and ask him where people can find more of your content.
Yeah, thanks for having me on, Maddie. People can search me up on Twitter at fmolina1996. And then I have a YouTube channel that you can find through my Twitter. It's called the DeFi Capital Show. But yeah, if anybody wants to connect with me, just reach out to me on Twitter. Thanks for having me on,
Awesome.
Maddie. I appreciate it.
Yeah, thank you so much for being on. And I put your links in the description below. So check it out, people. Everybody go follow Frank.
Thanks. Have a good night, y'all.
Yeah. Thanks.
Good to meet you, Frank. Take care, man.
You too.
Yeah, so one of the strategies I've been considering for like people who I've gifted a physical crypto coin to and gifted them some crypto is like whenever I add to that, to actually add some yield farming to their holdings, which for people who are holding for the long term, many years, or I mean, there are like, there are family members who are like kids,
Yep.
who aren't, touching the money for 10 years anyway. It
Yeah. What
it
happens if you're an
seems
ink
like a
farm
really
for
cool
10 years? Like, who
yeah.
knows? They could be billionaires.
Yeah, well, it certainly it seems like like a pretty good deal for them to be earning APY if they're already going to be holding coins like PulseX or Inc. Why not be earning more along the way? So,
Yep, fair enough. Yeah, very true. And I think the those yield farms, like, they are sustainable, and they do basically all come down to a token, which is the LP tokens. And those LP tokens can be moved from one wallet to another. You can send somebody an LP token rather than send them Hex. You can send them the Hex Pulse farm to their wallet, right? So, those things are definitely when you think of those farming tokens as just a token, it's a great token with utility. When you're like, wow, this makes 30% APR in a third token, that's great. Not very many tokens would have that utility. So yeah, that's a great move for kids. I can't imagine the possibilities of, like, if your dad set you up with $100 of in the PulseX farm, and 10 years later, when you're finished university or something, you get access to that, and then you can do something awesome. That's a cool idea.
Yeah, absolutely. Yeah, so that'll be, those are all good considerations that we've touched on before on the show to some extent, but I'm getting more experience using farming and different stuff, so it's always good to revisit how my thinking has changed. And so that's been really cool to see. We also, we had a thumbnail a long time ago, I would say, on a Tuesday night show, talking about how PulseX could flip Pulse at some point, and that was like a revelation at the time. But I'm glad to see other people are also not only wondering if that'll happen, but we're seeing the ratio close in closer and closer. Is particularly interesting. And then, so that's all good stuff to hear, kind of as I'm just kind of summarizing what we've talked about. Another thing that I wanted to mention before the end of the show is that today is the 1-year anniversary of Funding Gym launching Maddie token and
Cool.
29 other influencer, really education tokens. And so that's something I've written about extensively in the past week, and kind of cleared up a bunch of questions about that in particular. But happy birthday to Maddie token, and hopefully it continues to have a bright future. I know that since the liquidity was lowered, controversially so, the price has remained far higher than it was before the liquidity was lowered, which had some people scratching their heads that it doesn't normally happen. When people are accusing somebody of a rug pull, the price doesn't go higher and stay higher.
Usually not. Yeah, that's not my experience. Usually you get that big red candle down to zero, and it never comes back. That's what I usually refer to as a rug pull. But you're like, the nuances of liquidity, one of them things is that with less liquidity, the price can rise faster, which is why when you asked earlier about, what am I bullish on? I said Hex. Part of it is because there's less liquidity. For the Hex price to double takes less energy by far. And I haven't done the math on this, but it's less than any of the other major RH coins. So, for something like the Maddie token to have less liquidity, the price can go up faster. That's how it is. There's there's a balance and there's a time for everything. At a certain point, something should have maybe more liquidity, because then there's a cushion that will prevent the price from going down too fast. But if you're in a bull market phase where prices are going up and you can have, slightly less liquidity, the price will go up faster. And the people who, realize that and can work with that can, definitely realize some gains versus if, they just dumped at a higher liquidity position. That's not the win for anybody. Also, we are in DeFi. Anybody who wants to can provide liquidity. There is zero barrier to entry. There are, what do we got? We got Fux, that's phux.io, 9-inch, 9mm, PulseX. Those are the big ones anyway on the PulseChain. And anybody can make a liquidity pair with any two, or in the case of Fux, up to 8 tokens together in a pair, and there's no barrier to entry. So yeah, if users want to capitalize on some of the money that's made by providing liquidity, pick your favorite tokens and pair them together. This is for sure more of an advanced play, but people can do it. Just make sure you do your learning. This is not beginner stuff, but it is out there and anybody can do it.
Something I didn't say on YouTube yet, but I've said very clearly on Twitter is that, like, if you haven't bought Maddie token yet, you're late, and it actually, what's hypothesized could be the game plan doesn't require new people buying in at higher prices. And so that's particularly interesting as well, is to, like, tell people, like, don't buy it, right? And you're late, and you had 6 weeks where you could have bought it. You had the price being below $1, at $1, $1.14 with high liquidity. And so, the fact that I will continue to bring up Maddie token should not be misinterpreted as people who have not bought Maddie token should buy it. It's that there are deep lessons to be learned in the understanding of liquidity, which is at the heart of what is decentralized exchange, what is real crypto. On a day like today, when we have the Ethereum ETF going live and, like, more of the world is exposed to being able to buy crypto that's not in their self-custody, it's important to note that there's game theory that I've only come to understand because I've had experience with it, with Maddie token, to the point where you might learn something that helps you do better with RH tokens, or do better with, setting limit orders to exit a position versus market selling, because you're a shark and there's different, like, ways to think about that. So yeah, I think that I wanted to really emphasize the point today that I don't bring up Maddie token at this point to get anybody to buy it. I bring it up because I believe it will continue to provide extremely valuable lessons to how can something go up and stay there, basically, without expectations and without promises and that sort of thing. So
yeah, no, I think the nuances of liquidity providing is great for people to learn. And on something like that, like where you basically have, I know you didn't launch the token, some other entity did. And, like on the PulseChain, you can play with liquidity with like $50, right? Like on Ethereum,
I've done that before. Yeah.
Yeah, but you can totally do it here because it costs you 20 cents to add and remove things, like or less. Where on Ethereum, you'd never do that because it costs you, if you only have $50 and it costs you $15 to enter the liquidity pair, well, the math is really bad. But for 10 cents, you can do it. So like to take, Maddie token and pair with Hex or something like that, and people can try that on the different dexes that are available and learn about it. The one thing that, I've coached some people through this process. The one thing I would say, and I think this applies to most of crypto, but especially for things like liquidity providing, press the button slowly, right? Read the page, read the disclaimers, make sure you understand what you're doing. Because, there are pitfalls where, you could have a problem, but there's also huge gain to be had in understanding, even if you never use it to make money as like a way that you try to take yield from crypto. If you understand how liquidity providing works and how liquidity in general works in crypto, And when you understand like the basic products on the Pulse chain, like if we look at PulseX or 9inch, like those are Pancake or Pancake Swap or Uniswap work the same on Ethereum and most other chains, right? If you understand Fux, that's the same as Balancer. Like it's like these huge products on other chains. You can learn it on Pulse Chain for pennies by doing things like that, like pairing Maddie with Hex, Maddie with Pulse for like $20. Do it with $20. Worst case scenario, you can remove your liquidity when you want to, but it is not only a way where you can potentially get some yield. It's also a way you can even sell out of a position. Like, for example, let's say that I was in Maddie token and I had $40 worth and I wanted to move half of that out and I thought the price was going to go up. I could pair it against USDC from Ethereum. And as the price of Maddie token went up, I would end up with, there'd be a certain point where my initial $40 worth of Maddie would turn into USDC. I'd still have always, if it was a V2 like a PulseX type position, I'd always still have some Maddie, but I'd end up with more USDC than I had before. Now, of course, the price could also go down and I would end up with more Maddie token and less USDC than I initially put in. So you need to understand it, but there's many utilities to understanding these things on the Pulse chain.
Yeah, absolutely. Yeah, go out there and get your hands dirty with a small amount of tokens, and yeah, remember you can lose it all if you set a Hex stablecoin liquidity position that's wrong. Like the bots will come along and steal all your money. They'll arb it for you and fix the inconsistency in the market. So yeah, you have to be careful and probably educate yourself with like money you're willing to lose or take a course or something.
Oh yeah, no, that and those things are out there to learn from. But I think the biggest thing people can do is just literally like do something with $10. Like there's no experience like doing it yourself, right? Be like, okay, I want to learn how to liquidity provide. I'm going to do so on the Pulse chain with $10, right?
Yeah.
So that, and do it with like a wallet, like a separate wallet where you only have $20 in the wallet, right? Like really sequester. Yeah. Your
separate seed
maximum problem you could have would be very small. But yeah, there is, because it's so cheap, like, yeah, you can press those buttons and, it would take you a long time to lose $10 in fees on the Pulse chain. Like all month you could be pressing the buttons. So yeah, it's worth a shot anyway.
Absolutely. Great. What other news in crypto are you paying attention to this week?
Well, obviously there's the Ethereum ETF thing. That's cool. That's gonna hit us. Now my focus is always on the Pulse chain, so I'm watching what's going on around here. So like I said, there was a lot of Solana that's been bridged over the Pulse chain. I think we'll see a trend of other things like that, like maybe more wrapped Bitcoin from Ethereum bridged over. Maybe we end up with AVAX, bridged over, things like that, like other big chains. If they can have their gas tokens in the bridge format via the RH bridge, which is free to do this way. Like you can send anything from the Ethereum side, aside from the gas price of Ethereum, you can send anything over and there's no fee to send it here. Whether there's a liquidity pool here, that's another question. But I think what we're going to see is more things like that. We'll see like more Solana over on the Pulse chain. Maybe we'll see some of the other big new chains that have their copies on Ethereum that could be bridged over. And I think that'll tie into farming options. Maybe we even see farms on PulseX. Like what if there was a Solana Pulse farm on PulseX? That would be pretty cool. I think a lot of people would sign up for that, right? So,
how are people bridging their Solana?
That's a little trickier one, because what you're looking at is actually you're bridge Solana essentially, right? Because Solana is a non-EVM chain. So EVM means if Ethereum virtual machine. So like Pulse Chain, Ethereum, Polygon, AVAX, they're all kind of copies of Ethereum and they work fairly well together.
They're compatible.
more or less. There's still, you need bridges and those sorts of things, but it's more direct because you're dealing with the same code. Solana is not that. They run off something called Rust, which is one of the reasons that Solana has very little DeFi compared to Ethereum or PulseChain is, it's not the same coding. You don't need the same developers. So they end up with mostly memes, which is kind of terrible. But so there's a different kind of bridge that's bridging to Ethereum. I think they call it wormhole Solana. And I'm not a technical genius on that part, but it's bridged to Ethereum. And then from Ethereum, it's bridged to PulseChain, right? You could make direct bridges to PulseChain, and I think that's an interesting idea from other chains. Now, Solana, that's a bigger fish to fry, so to speak. But for something like AVAX or Polygon or Binance Smart Chain, it would be the same product as the Richard Hart bridge. You could use to bridge those things to PulseChain, right? And it would be just as safe if it was managed properly. So, something like that, maybe somebody with some connections could set up for us. That'd be great.
Yeah. That would be great. And we got your friend Sami in the stream. Great streaming friends. Crypto to 10 trillion would be nice for all.
Agreed.
I definitely agree. We got Hex Monkey with the $10 super chat. Thanks for that. Great discussion today.
Right.
Maddie, Abdul, Frank, and Rachel. Tuesday night always means Maddie for me. Thanks, Hex Monkey. Great to see you there.
There you go. You got a hardcore supporter there.
Yeah.
But yeah, I think the everything has its time, and I don't think it's quite the PulseChain's time yet, but more and more of this infrastructure is coming in, right? And I'm not keeping as close an eye on things external to the PulseChain, but I see what the other developers are doing. I see that the PH guys have made like a Fame V2 where they're bringing in more new tokens for leverage, and they expect people to come, right? So nobody's building these and some of this stuff is really expensive to build. Nobody's building these huge DeFi protocols on the PulseChain without an expectation to come. And if for the users to come, and the guys who are making these decisions are sharp, right? Like they have a plan, right? They're business people, basically, or blockchain scientists in the case of the devs, right? Like they're not doing this for free. They're doing this because they have a plan, because they might even have connections. They might even have an idea of what's going to happen, some of them. And I can't say that's true. That's just speculation. But when I see the kind of movers and shakers who are doing things on the PulseChain, and I know that some of these guys are going to the Bitcoin conference and stuff like that, and they're going to be knocking on doors there and telling people about the PulseChain. Wow, I wonder why they would do that. Is it because they're charitable? No, they're not. So I think it's because it's a good place to build. So I think I like to think anyway that we're all going to win together, and that now is the time to be here. We're still early, which is kind of sad. I'd prefer it to be late in some ways. I'd prefer to be paying $10 per PulseChain transaction, because we'd all be crazy rich, right? Which could be something in the future. But on that day when you're oh man, PulseChain, $10, what the hell? That will be a good day.
Yeah.
And I think it is coming.
Yeah. I mean, people who have been in Ethereum since the beginning, since 30 cents, they're not complaining the same way about $100 transaction fees as we are.
Nope. Yeah. And realistically, we're never going to have $100 PulseChain transaction fees. I don't think, but we could be paying $1 per transaction instead of 10 cents. That's not really crazy. It would still be a good deal. It would seem expensive to me, but it would still actually be a good deal compared to most of the other big chains. But that's all it takes, right? And we'd still be a epically better deal than Ethereum. The truth is, by the time we were paying $1, Ethereum would probably be paying, they might be paying $200. So it will still seem like a fantastic deal to come over to PulseChain and pay $1. But for everybody who's here right now or thinking about getting in, and you're looking at 10-cent transactions, that's the writing on the wall, right? Of oh wait, this is a copy of Ethereum, but instead of paying $50, I pay 10 cents. Yeah, that's how it starts. Ethereum at one point was also 10 cents per transaction, but it's not anymore. And you have basically the same product but with a lot more influencers focused on it, as far as I can tell. So yeah, I'm feeling pretty good about that.
Yeah, for sure. Well, it'll be exciting to see everything that happens later this week at the Bitcoin conference, and
Yeah.
I'm sure there will be a lot of cool stuff to talk about next week on Tuesday.
Are you going to go to the Bitcoin conference?
Yes.
Okay.
Yeah.
Cool.
This will be my 3rd year in a row.
Nice. Yeah.
Yeah. So looking forward to that. And as I mentioned earlier in the program, Big Kurkowski is hosting a booth there for the highest of stakes. So
Nice.
make sure if you're going to the Bitcoin conference to go to the highest of stakes booth on the first day, so that you find out where the following meetup will be and that kind of thing. So yeah, so I'm looking forward to it. I heard back from ChrispyMan that he's having a good vacation still with his family. So he'll be back in another week or two. And Tobiwan will be back next week, I believe, as well. So that'll be great. And so Fast Abdul, I want to thank you for hopping on and joining us with the Game Theory chat. Can you tell people where to find you and more of your content?
You bet. So I'm on Twitter, just like you see my name on the screen here, Fast Abdul. And my website is 2phux.io. From there, you can find links to our Telegram room. We basically forked Convex for the PulseChain. It works on top of the Flux exchange. So yeah, it's 2phux.io. And then just follow the links to Twitter and Telegram there. Watch out for scammers, folks. They're thick out there.
That's right. Yeah. And for me, you can go to mati.pls.fyi to see all my links. I'm here every Tuesday and Thursday night for eternity. And go ahead and hit the like and subscribe button. I'm going to play a 47-second outro from our friends at VanEck.
Let there be. An open source network where money flows more transparently. Let there be. Transactions without resource-intensive mining activities. Let there be. Tech that can unchain. Your code is the key. Let Ether be. Enter the Ether with ETH. You can now get Ether exposure for 0 fees with the VanEck Ethereum ETF. An investment in the trust involves significant risk and may not be suitable for all investors. The trust is not an investment company registered under the Investment Company Act of 1940 or a commodity pool for the purposes of the Commodity Exchange Act, and thus offers few.
Oh, I thought we were gonna have Big K joining us. We're still live. Let me close it out here.